Hi everyone, no major news today, so let's get straight into the data. Do me a quick favor and like and subscribe and hit the bell to help out the channel. And let's get into it. So fear and greed did step up today. Despite the fact that markets were generally down, you can see on the charts we are down a little bit. Still really extended from that 120 EMA. Definitely an extreme grade there. And then looking at stock price strength, you can see we did step down a little bit. So we're back into regular greed. Same with breadth. Breadth has been in regular greed. And then put call ratio still in extreme greed, which is interesting. Volatility, we saw a little bit of a step up off of that 50-day moving average. And then looking at bonds, no changes here, still sitting in extreme greed for both of these. Moving over to seasonality, you can see today was expected to be a step down, and we did get a step down. And then the last trading day of the month, this is a leap year, so we have a 29th of February, and that is expected to be quite weak seasonally. Russell, slight step up, but that is the only one, and I would expect it to really be down going into that PCE data. And then for the Friday session, it is generally flat, and then all the way up until Tuesday, you might see a slight peak. And then on typical years, we have a bottoming around the 8th, which would be Friday of next week. And then you get sideways chop and then a little bit of a rally into the second half of March. But looking at those election years, you can see it is significantly weaker here up until mid-March. And then you get sideways chop instead of that slight rally into April. So definitely still a weak seasonal period. Moving over to the economic calendar, you can see GDP coming in at 3.2, just a slight bit lower than what we expected. Not a lot, and it definitely didn't move markets very much. We're still sitting well above that 2% number and well above the 0 number, so we're not seeing recessionary or depressionary numbers there on GDP quite yet. And then looking at Thursday, of course, we have CPI, core and headline. The core month-over-month number expected to step up 2.4, which is a pretty substantial step higher. The year-over-year number is expected to be a step down. I would expect it to come in hotter than that, just like we saw on CPI as well as PPI. Headline number here, 2.4 versus 2.6, so that's actually stepping down pretty decently. And then the month-over-month number, a 0.1 step up on the headline number. We also have Chicago PMI, still below the 50 line there, not great. And then you got Fed balance sheet, continuing to watch that one. For Friday, you have CPI for the Eurozone. You also have some economic data, global US manufacturing, expected to be 51.5. Manufacturing PMI as well as manufacturing prices, still watching those. And then you have Michigan inflation numbers. I think those are becoming a little bit more relevant here. And then you have consumer sentiment, also continuing to watch that Michigan data. Moving over to Max Pain, you can see we finished around 505, still have that really strong 500 number. Total options continues to step up here, 1.58 million. Put call ratio also stepping up to 1.7. No major put strikes until about 470. I don't think we're going to get anywhere near that number, but I think a close below 500 definitely makes sense for this week. I've been saying it all week. We haven't really seen these big call strikes matter too much yet, but this could be the one with that CPI data tomorrow. Absolutely could be the catalyst to push us down another 1% on the SPY. Moving over to the charts, you can see we did see a little bit of a bottoming around 504.50. Didn't quite get back down to that level on the SPY, so we saw a slight downtrend, flattening here, potentially a slight higher low after hours, but we did fall into that level. You can see that candle after hours was a pretty big down one of about 0.24. The whole day was only 0.13 to the downside, so we sold off about double that after hours. So that's not a great indicator. You can also see that 55 EMA. We tested that after hours yesterday, got close to testing that here today. Continues to be your point of resistance at 506.61. That continues to downtrend slightly. Support right now, you have the 144 EMA at 503.06, and then the 200 sitting at 501.75. You also have the daily chart 9 EMA at 503.34. If those levels start to break down, you do have a long way down to that 21 EMA at 498.34, which would get you below that 500 level. Momentum, nothing really. RSI breaking below the SMA. Again, shorter time frame, slightly bearish. So nothing crazy here, but I think that could change tomorrow. Moving over to the NASDAQ, significantly weaker here on the day. Big dip pre-market, just like everything else, but we did hit that 21. That was resistance here, 435.89. Continue to hold that level and break down all the way down to the 144 on the hourly at 433.67. Also have the 200 at 433.56, and I have a level here, 433.24. And then you can see the 9 EMA sitting in that same zone, 433.59. very important level right in that same zone. And you can see we are down big after hours. We did see a slight bounce from that 200, but momentum bearish, RSI bearish here on the daily chart, definitely seeing some weakness. Got the 21 EMA sitting at 430.97, so that would be about another 0.5% lower. And then I have a level here, 428.53. So critical zone right here between current level and that 21 EMA. Watching this one closely. Let's go ahead and extend out this trend line here, see where that lands. Right there, right in that same zone, right at that 21 EMA, between those levels there, around 431.50 to 432 in that same range. So if this starts to break down, then we're going to see a breakdown of that structure. Moving over to the Russell and the Dow. The Russell was down on the day 0.82, still held my level at 201.88, got very close to it. Did touch that level just by a penny or so. The low of the day was 201.87, so we breached it by 1 penny, ended up holding. You can see we're down a little bit after hours, still above all the EMAs and SMAs, so the structure's still intact, but this is starting to look like a potential double top again at the same area, or a slightly lower high off of that 204.62 level. Let's look at this here on the hourly chart. You can see we tried to rally up, could not get back to those highs from yesterday, and then sold off into the end of the session. Still holding that 55 EMA at 201.88, right on top of my level at that same point, but momentum bearish, RSI bearish here on the shorter time frames. Dow, on the other hand, 0.02 to the downside, momentum bearish, RSI bearish, but really not breaking down significantly. You can see it did touch our level here at 387.77, breached it by about 17 cents, and then ended up rallying right back, filling that gap, but definitely starting to see some weakness there. That's 3 days in a row of bearishness, but you can see there's definitely some buyers coming in at that level. Let's look at it on the hourly chart as well. You can see definite selling going into the after hours ahead of that CPI data. 144 EMA on the hourly at 387.96, so super important zone, just like we saw on the NASDAQ. Moving over to the MAG7, you can see we continue to break down here, 0.64 to the downside, momentum rolling over, RSI rolling over, continuing to test that trend line, which we did again here today, breaking down from that level. Let's go down to the shorter time frames on this chart. You can see same kind of downtrending, slightly lower lows each time, still holding above that 144, which is sitting at 333.42. I would guess we get a test of that level next. I would guess we get a test of that level tomorrow. We'll see how that plays out. Continues to hold this very slow downtrend. Momentum bearish, RSI bearish. Moving over to Apple and Tesla. Apple continues to battle in this same zone. Super important between 179.69 and that 182.37 level. We've been here about 5 times at this point, continuing to hold that zone. Momentum not doing much of anything and potentially drifting towards bullish, but RSI breaking down here, another bearish candle after the bullish one yesterday, 0.66 to the downside. If this breaks, like I've been saying for a while, I think there's quite a bit of downside potential. It's been battling and it continues to do so. And then looking at Tesla, bullish day, 1.61%, momentum bullish, RSI bullish. I continue to like this trade here. I want to see it get above this previous level. Going back to 16 February, it has not held above that level yet, but it got very close here today, and then it's selling a little bit after hours. Let's look at that on the hourly chart. You can see that wick high, it got all the way up to 205.33. We've tested that same level on Tuesday, and then we tested it again here today. So testing that same zone, breaking down, it's continuing to hold slightly higher lows. So this is still a bullish structure on the shorter time frame. And I do think it can get above that level, and then 214 would be your clear next target. So you'd get about a $10 move from that breakout potential to that next level, but it just continues to struggle. And I think it's probably going to run into some weak markets with CPI. So we'll see how it handles tomorrow, but still watching for that break above these previous wick highs around that 205 level. Moving over to Google and Netflix, let's go ahead and mix it up here today. You can see Google has been in a pretty significant downtrend. We got lower lows here again, breaking my level at 138.21. We're down more after hours. 133.86 is the next level here. That's also the highly traded zone right in that same level, and the 200 SMA on the daily chart, 133.57. Seems imminent that we're going to get that level, so that would be about another $4 of potential downside. Momentum bearish, RSI bearish, definitely weakness in Google. Looks very similar to this move here, actually. Currently at that 144, which is where we are right now, and you can see looking for that breakdown. See what happens on Google. I think this is interesting. They've definitely had some bad press about their most recent AI, so that's not helping. And then looking at Netflix, this has been on a run since their earnings. You can see that massive gap higher, dipped slightly, and then we got higher highs, and we got another higher high yesterday. Next resistance would be 614, so about another $20 or so of potential upside there. And then above that, I don't have any levels until almost $700. So we're starting to get back into that area where we were during COVID. You can see that peak we had here going back to September of 21, got all the way to that level. And then we had that massive breakdown, fell all the way down into the 160s. And then we've rallied almost all the way back, round tripping that move. Took obviously a very long time to get here, but it seems like we're going to head towards that level at this point. Moving over to staples and discretionaries, we're seeing both of these kind of run a little bit. 0.11% on staples, still holding that trend. Resistance up around 75.09. 75.40 is the level, so continuing to see bullishness there. Discretionaries pushing still towards that 185.36 level. That's the current price target. Momentum bullish, RSI bullish. Everything still looks good here. Broke out above this previous level. Looking for that next one. About $2 more there. Potential to the upside. And no changes really from yesterday's thesis. Moving over to industrials and utilities. Both of these still doing exactly what they were doing yesterday. Slight bullish day for industrials. Hit the trend line. Did fall a little bit after hours, but still grinding along that level. And then utilities finding strength again. It was a strong day for them yesterday, 1.89. Another one here today, 0.31. Momentum bullish, RSI bullish. Still can't get above that 55 EMA at 62.39. Next level for me, 62.59. But right now, still holding at a higher low. Still holding that 21 EMA. Looking for that push. I think we at least hit the 200 at 62.14. And then if that breaks, I have 64.20. And right now, this does look very good. So very solid base. You had a double bottom at that 59.95 level, a little bit choppy on that second bottom, and then a clear higher low. Looking to break above this previous high here. And if it does, I think 64.20 is in range. Moving over to breadth, 20-day average did fall a little bit. Continuing to hold in this very slow grinding pattern, still above all the EMAs and SMAs. Momentum, it's been choppy. RSI still above the SMA, still above the 50 line, so nothing changing, just a slight down day. And then 50-day breadth, we got another continuation, broke the 62.25 level. We're above the 9 and 21 EMAs now, looking for a push to that 68.66 level. We'll see if it can hold this trend into the CPI. We got to step up, RSI trending higher. It's not above the 50 line, but it does look okay. So right now, both of these look a little bit bullish. Moving over to the put-call ratio, notice this giant spike down all the way into the 0.7s. People are definitely buying these dips, which is interesting. So we got a bit of a fall, and we had a bunch of calls entering the market, and then we headed back towards that mid-range. But this is trending down slowly in terms of momentum, RSI breaking down a little bit. So right at the level, gap to it, and then dipped all the way down to that 0.7. To me, this is saying that the buy the dip reflex is still in markets. We're not seeing major spikes down to that 0.6 or anything crazy like that. But typically on stronger down moves, you see puts entering the market, and we are nowhere near these recent highs on this put call ratio. So pretty interesting to see this staying very low, even with slightly weaker markets. Moving over to yields, you can see the 2-year did break down a little bit here today, 1.17. Did get below that 9 EMA, so it looks like we're actually going to fall here. Momentum has been rolling over a little bit. Hit that resistance at the 200, breaking down here. 21 EMA sitting at 4.56. We'll see if this spikes up on CPI data tomorrow. Definitely could. And then the 10-year doing not much of anything, continues to consolidate just below that 144 EMA at 4.31. Moving over to the dollar, you can see the dollar did spike up pretty strongly early in the session, overnight, going all the way up to 1.42, breaking all the EMAs and SMAs on the hourly chart. Big wick to that 144 EMA on the daily chart, so that 200 looks like it's set to hold. Momentum ticking towards bullish. RSI did tick higher, but it's still below the SMA, and we are currently holding a higher low, so right now, the dollar looks a little bit more bullish. We'd been testing that same level, consolidating at a point of support, holding above 103.64. Next level, 104.4, and it does seem like it's going to head in that direction. So that's pretty interesting to see some bullishness on the dollar going into CPI. Could be interesting. Definitely looks stronger today than it did yesterday. Moving over to bonds, J&K not doing anything, still holding right in the middle of that range. You have a consolidation of EMAs and SMAs at this point, so 9, 21, 55, and VWAP all at the same exact point. That is a little bit concerning, waiting to see what happens here at that consolidation. And then looking at TLT, popped up higher with yields going lower here today, still below the trend line. Again, it'll be interesting to see what happens. If yields go higher on PCE, then I would expect this to break down, obviously. But direction here is definitely going to be based on that PCE data. Moving over to volatility, move index continuing to roll over here. Momentum bearish, RSI bearish. And then looking at the VIX, we did get a little bit of a bounce off of that 55 EMA at 1398. I was kind of expecting this to break below the SMA, so I had a little bit more of a bullish thesis going into the day. Didn't quite do it, and now we have momentum still bearish with a bullish candle, so that's interesting. RSI stepping higher. If this holds at a higher low and we get a bigger spike here tomorrow, this could be headed much, much higher, so continuing to watch this one. PCE data could be the trigger for this to spike much, much higher. Just need that one catalyst, and this could be it. Moving over to my accounts, I obviously was down a little bit on the day. I was bullish going into the session, and I did have a lot of protection on, but not enough to protect me from all of these moves. And we did get another move down after hours. We talked about it. Down about 75 cents after hours on the Qs. IWM down a little bit as well, about 20 cents there. So I did sell some 202s for 2 days from now for $1.68, so giving myself a little bit less than 1% of upside potential until the Friday session, so trying to make a few dollars there. I was a little bit more conservative because I thought we might see some downside on PCE. If we don't, I'm fine with making that $1.68 on that position over the next 2 days. And then looking at the Qs, I do have a 434 put for tomorrow. I probably should not have held that. It is expiring tomorrow, so I can absolutely roll it out, and we'll see what happens. That 433.50 to 433 area is super important. If that area breaks down, I will definitely be taking that put option off, probably for a little bit of a loser. And then I again was pretty conservative here, sold a 434 for $2 for tomorrow. I rolled that down as the stock was moving lower after hours, pretty early in the after hours period. And you can see it's bounced about 50 cents from there, which is absolutely fine. I have no issues making the $2 on that position if we get a little bit of a spike. And like I said, it expires tomorrow, so I can roll it up and out if I need to. And then I would make the money on this put option as well, so that would be fine. And then I still have this strangle, making a little bit of money on that over time. And then TQQs, still holding that same position at 55. Made a little bit of money on that to help protect from these losses. This does expire on Friday, and then I have that 58 put. A little bit concerning there. You can see it fell a little bit down to 58.64. I'm okay with this at 58 for 67 cents. If that 433 level breaks, like I said, on the Qs, then I'll probably take that put option off and just continue to hold this call. We'll see how that plays out. Tomorrow is definitely going to dictate some strategy here going into the rest of the week and then early March. Let me know down in the comment section what you think of the markets and the PCE data tomorrow. Is it going to come in hot, and is it going to send markets lower, or is it going to be a nothing burger and we're going to continue this rally? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.